episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Nico Salgado. He began investing in real estate in 2012 with a single family development project and has since transitioned into multifamily. He has gone full cycle on 194 units and is currently a general partner on 3 projects consisting of 70 units in Florida in 1 zip code. Nico is also a Spanish teacher for the last 19 years. So thank you so much for coming on the show today.
Hey, Charles, thanks for having me, man. I appreciate it.
So I was on your show earlier, which we'll talk about a little later in the episode. But before we get started, can you give us a little background on yourself, both personally and professionally, prior to getting involved in real estate investing back in 2012?
So I always thought real estate investing was cool as a kid. Even as a little kid, I would roll up a little wad of money and save my money, saying I was going to buy a house because I knew just from playing Monopoly and things like that that owning real estate was prestigious and also, it was something that would help my family out. I knew that if I owned something, that it would be beneficial to my family. Obviously, I didn't know all the nuances and stuff like that, but I was literally saving money. You can ask my mom. I was wrapping up money in a little wad to buy a house one day, and that's really where it all started. And I in college, I was going to go the route so I went to school for business in early 2000, and I was going the route of going to be like a fix and flipper just because of all the shows that were on. And I had a friend that was a contractor, and one of my business teachers was like, he totally turned me off, man. He's like, do you know what you're doing? Why would you do this? And I thought I had a master plan set up, and I ended up just not doing it. I did not do it in 2002 when I graduated. I ended up just traveling a little bit to kind of do some soul searching. I traveled for a year and then found myself wanting to be a teacher because I wanted that time freedom. Then 2012, I always had the itch though to get into real estate. So 2012, I ended up buying a little piece of land down in Florida down in Nicaragua during my world travels, because I used to travel everywhere to go surfing. It's one of my passions, and one of the time freedoms is really important to me. So in 2012, I bought a piece of land in Nicaragua and subsequently built a house on it. It took me 3 years just to get the title cleared. Imagine that. And I ended up selling that property in 2020 for a profit. I was all in about 65,000, and I sold it for 100,000. So that was my first real go around with real estate or investment real estate. And in 2019-ish, 18, 19, I ran into some serious issues financially. I was, it's a kind of a long story, but I ended up, my taxes essentially doubled it was, something that happened in my town because a lot of the houses were demolished after Hurricane Sandy, like mine. So I was not paying full amount of taxes for a certain amount of years. And when those taxes doubled, I was no longer able to pay my mortgage and meet the escrow. So I decided to pick up more work. I ended up working, at the same exact time I was reading the Purple Bible, and they talked about real estate and businesses. I ended up starting a business. I was working full-time as a teacher. I ended up taking on a business, owning a wood shop, and was selling things. So I was making furniture and cutting boards at night and selling them just to make ends meet. And I did it, and it worked. But about a year into that, I realized I could not sustain this because I was literally, just losing sleep and doing everything. And I was going kind of insane. And I said, I need to go back to this Purple Bible and find something else. And it was passive income that I really, resonated with. And that's when I started my real journey into the multifamily space.
Yeah, so you're on Long Island, is that correct?
Yeah, man.
Yeah. So I'm originally from Connecticut, so property taxes in Connecticut are high, and then Long Island is a whole nother story of what's happening. So I mean, that's crazy. Especially, yeah, Sandy was right then too, huh? I mean, it was just, yeah.
Yeah. Yeah, 2012. And so then I ended up having to demolish my house because it fell off the foundation. And I was living with my in-laws for 3 years trying to get that all sorted out while we rebuilt the house and had we had what's it called? A lawsuit, and we won and all this nonsense. But yeah, so after, we were paying such low amount in taxes that after I moved back into my house a year or so later is when the taxes essentially doubled.
It's crazy. I mean, it's just it's insane. So it's one thing that you're talking about, like how you had to go back to the Rich Dad Poor Dad for the Purple Bible, as you refer to it, and it's one thing that I remember reading. This is many years ago. Kiyosaki, one of his books, it wasn't Rich Dad Poor Dad. Anyway, he's lost one of his businesses and he needs to make money, and he's in a waiting room ready to go in for a job interview, and he like literally like turns around and walks back out because he's like, it's not the way that's going to work. You know what I mean? And it seems like you had the same revelation. So, fast forwarding to today, can you give us a little background kind of on your company now and what types of properties you target? I love how you guys are really niched into one area because that makes everything much easier, especially with as we would call smaller multifamily properties, smaller commercial multifamily properties that you guys are really focusing on.
Yeah, great question. So I am now exclusively focused on the Central Florida market, more in particular Tampa, or the Greater Tampa MSA, as I call it. And I look for 10 to 70-ish units. I typically look for C class. I would love to get into B class. I just don't know if I've graduated to that yet. And I look for concrete block construction, anything 70s and newer. I would prefer, obviously, the more recent properties. I look for pitched roofs, and I look for growth areas, as well as median income of a minimum of about 45,000 family median family income.
Yeah, that's great. You've really narrowed it down there because at 45,000, then I mean, it just works out exactly what you can charge for rent. When you divide that by three of what an annual rent is, so it makes it easier for knowing that people in the area can actually afford the rents of what you're doing. But you said you just closed on a property, and we were talking about this for a few minutes beforehand. I was talking your ear off about it. Go into a little bit about this deal. It's an interesting deal, and in Lakeland, if I remember correctly, and you obtained seller financing with it. So if you go a little bit into that, because I think with higher interest rates now, this might be a way that some people selling could get the price they want, and people buying could actually pay more for the property because of working out some sort of creative financing.
So yeah, thanks, Charles. I love this method, and I was always kind of intimidated by it. You never, if you don't understand everything, or me personally, if I don't understand something 100%, I kind of get a little intimidated by it, and I tend to kind of like back off. However, I was all in on this because it just seemed like a no-brainer. This property was actually listed as a potential seller finance deal back in August of 2023. And I saw it and I underwrote it, and I did not like it. I didn't think it was going to work at asking price, and I told the broker where I was shaking out, and he was like, "Nope." So I ended up just putting that on the burner. And then a friend of mine got it under contract, and I was following along closely because I always follow deals. Like I'm kind of a nerd where I'm just hounding these brokers, hounding the people that are in the deals. I'm always checking in because these deals do fall through, and that's what happened here. It was locked up and under contract for a few months, and I just waited and I was patient, but I checked in every once in a while, and the way that I got word that it was not going through was from my insurance agent, who I'm very close with. I hang out with him a lot. Every time I go down to Florida, we hang out. He's actually taken me flying in a plane on his boat. Really good guy. And I said, and I'm the one who connected him with this buyer that had it under contract. And I kept checking in. I was like, Bill, man, is this thing going through? He's like, no, it's not happening. At one point, he's like, I don't think they're going to be able to close on it. I think they're having trouble finding the cash. I said, okay. So I reached out to the broker, and he was like, it's available. I don't want to deal with these people anymore. They fell out of contract. Let's go. And the sellers at that point as well were also fed up. So I got it at a discounted price, and I was able to negotiate as well the terms that I liked for this type of deal. So it ended up being 16 units. All rents were averaging about 700. However, we have two other properties in the same area where we know we can get at least 1150, and Section 8 was offering 1113. So we're essentially going to be pushing rents $500. So I ended up negotiating about 25% down, with a 4.5% interest rate, interest only, fixed for 5 years.
Yeah, that's pretty amazing.
Yeah, and we nailed this one, and it was a 30-day close. They were like, "Fine, you want this?" They like, their fight was that you could tell that they just wanted it closed, so they were not fighting back on the purchase price as much as they were fighting back on the time frame to get this thing closed, because they had just been through the ringer with somebody who couldn't close. So that's something that's really important for people, is if you can close this deal, you have some power, right? So you have negotiating power.
So you spoke about the relationship you have with your broker, which is super important. And I think when I speak to new investors, one thing they usually struggle with is showing credibility, especially with brokers, before having any deals under their belt. So how did you overcome this initially when you were starting out?
I love this question, and this is something that I'm still connected with a lot of communities and a lot of people that are just beginning, and I kind of coach people and help people as well in their initial stages, and it's something that I ran into as well. So I began looking at deals down in Tampa or the Greater Tampa MSA at the end of 2019. I did not close my first deal until almost exactly 3 years later. It was November of 2022. So I've done other deals as well as a co-sponsor. However, it was my deal that I finally got under contract. I finally got a broker to agree to, right? So step one was I flew down there and I met with some brokers. Uh, Obviously, I messed up those conversations, and obviously, I looked like a newbie, right? But I kept at it. Every single deal that they put out, I would underwrite, and every single deal that I underwrote, I would provide guidance or feedback to the broker on. And they really appreciated that. So they knew how I underwrote deals, and they knew where I was coming from. I also created a one pager, which I share with people for free if they want it, just kind of explaining to the broker who you are, why you feel you can close this deal, who you're connected with, et cetera. And I would consistently say to brokers, I'm connected with X amount of groups. I have X amount of KPs in the groups. I can close these sorts of deals. And it just so happened that we had just gone full cycle on one of the co-sponsor deals that I did. And I said, hey, we just sold this property. I'm ready for a property. So all of these little things, little hits and consistency are where the broker finally decided to take me seriously. It took 3 years, though, to be honest with you.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com. When you were, what kind of debt did you use on this first deal? So you said you had KPs in the deal. I mean, are you using bank financing for these properties? Are you using an agency financing? You're saying these are C-class properties. So
Yeah, I went with local banks for everything we've done, except for the recent one where we did the seller financing, which was phenomenal, and I would totally recommend that if you could swing it. But back to that seller finance before I answer the other debt questions. It's not something that you're supposed to go out and say, "Hey, can you seller finance this?" Right? First of all, the owner has to own the property outright, otherwise you're going to do a master lease option instead, if that's even on the table. And the owner has to be savvy enough to understand what it is, and they have to be willing to do that, right? And hold the note for you. Not every owner is willing to do that. Not every owner is capable of doing that. So this was kind of like, they're few and far between, but if you can get one, it can work out really well for us as buyers. Now, back to the other debt questions. So the first property we bought was a 44 unit property. It was a portfolio of two properties within a mile of each other, and we did two different banks for each one. And this was exactly when the rates started kind of going up fast. So we had to close quick to kind of lock something in. So the first one was a 16 unit. We closed in October of 2022 with a 4.98% interest rate. It was also fixed for 5 years. This is why I like banks, local banks. They are negotiable
yeah.
on a lot of different points, as well as you can have it fixed for a certain amount of years with lower prepayment, or you can even negotiate no prepayment penalties. Um, and then the other one was we closed in December. It was the same portfolio, but it took us a while to close this one because that first bank didn't want to touch it. It was right across the street from mobile homes. So we ended up going with a different bank, US Century, who's also a local lender down in Florida. And they gave us, by the time we closed that one, the rates were 5.7, no, 5.85%. So it went up almost a point in a few months, which was crazy. Times were crazy back then, but they did give us a higher leverage. So the first deal, the 16 unit, was 65% levered, and then the 28 unit was 70% at 5.85%. Both of them are fixed for 5 years. Both of them had interest only for about a year. One was 18 months, and 30-year amortizations on both.
Yeah. Yeah. You're usually getting 20 or 25 years on the amortization. So going 30 is great. The other thing too is that with the prepayment penalties, that the fixed portion is great about going with community banks. And what I found with working with community banks, as you said, is it's all negotiable. And I like it too, where you have, especially if you're working with local banks and credit unions, the credit committee is typically local, so they know the area, they know they know where they're investing. Comparing talking to someone that's out of state that has no idea, you might be talking to someone that has a branch down the street and they pass by it. You know what I mean? So I love that part about it. The other thing with the prepayment penalties, which can get pretty onerous when you are with any type of agency debt. You know what I mean? It's what I found with when doing bank loans is that it's a simple step down, and like I've had the 3-2-1. So like the first year is 3%, second year is 2%, third year is 1%, or if you're going, 5 years, it might be like 5-4-3-2-1. You know what I mean? So you have an idea. You don't have to guess where interest rates are going to be. You know what I mean? With these more sophisticated prepayment penalties, because then you have to figure out with all yield maintenance, all this stuff. So knowing exactly when you're refinancing what you're doing gives you an idea of where you're going to stand, no matter how many years the project is. Yeah, if you agree with what I'm saying there.
Absolutely, Charles. Great guidance there. And I feel the same way. I have yet to do an agency loan. I'm not counting it out, but I will at some point. I'm just not there yet.
Can you talk a little bit about working and starting with smaller properties? Because like when I started investing in multifamily, my first 3 years I was starting with small multifamily properties, so like 3 units and stuff like this. And then I went into a little, some larger, into small commercial multifamily and stuff. And I think like you see a lot of gurus online, and they're pushing getting into large complexes, 50, 75, 100 plus units on your first deal for people that have never invested in real estate or never invested in a multifamily property. Can you tell us a little bit about your thinking on this when you're coaching students that might not be ready to kind of push the risk that far? And is it okay to start with smaller properties, and kind of like, what are your thoughts on this?
Yeah. What a good question, Charles. I really think that people need to begin. Well, you should begin small. I don't want to say that you should or you have to, but you should begin small if you're going to be working alone. Okay. And you should never really be working alone. So and if it's you and your partner or a couple partners and you have the same amount of limited experience, I would absolutely recommend staying in the smaller multifamily realm. Why? Well, because I mean, there's just less to lose, less risk involved. Because the higher you go, the higher you go in purchase price, the higher you down payment, everything's going to be a little bit more. Uh, you know, the consequences are going to be higher if you mess up. And it's okay to mess up, and I mess up all the time, and I make little mistakes. As long as you learn how to course correct and move on, or even get advice from gurus and people out there who've done it before. However, if you're going to do a larger property, you can, but you have to understand that your role is going to be limited because you are not going to run that thing. You're not going to be the main GP on that, and you should not be. And I really feel that and believe that you should not be the main GP of a mid-size or large multifamily property until you have done this for years. Just like any business, you need to have experience. And how do you get experience? You got to cut your teeth. You got to do smaller ones and or sit alongside somebody doing a bigger deal, but you're not taking that main lead role there.
Yeah, I totally agree. That's one thing I always stress, is that you have to do a deal, or at least one deal by yourself, before you start raising money and stuff like that. I mean, it's just, you got to have the proof of concept. And
Yeah, yeah. Well, so man, it's crazy now raising money these days. So I know, and I'm connected with people that have not done it properly, where they're going out there and essentially lying to people and getting money to invest in something that they think or that they're portraying as a great investment when they don't really know. It takes experience to know what a great investment is. And I am shooting for home. I'm not shooting for home runs. I'm shooting for base hits at this point. And I'm very clear about that when I'm doing my investor pitch, and I'm clear about my experience and my track record and what I've done and what I haven't done and what I've seen and what I have not seen. Raising money is a whole nother ball game. However, on my first deal that I did, it was only 1 year into my journey. I had 1 year of experience of education, and I did a deal, but I did it alongside people that knew what they were doing. So I was comfortable bringing my investors in because they had the track record, and I utilized their track record. And I was really just a fly on the wall on all the asset management calls, and I was the guy who was relaying information to my investors for that team. But I didn't run that deal at all. And thankfully,
Yeah. No, that's great information there. So in your kind of over these years of working with other people, doing deals yourself, what are common mistakes you see real estate investors make, or maybe ones that you've made yourself during this career?
a lot. So debt you mentioned earlier is extremely important. You have to understand the debt that you're getting, and this is actually becoming evident today, and will become evident as we were talking earlier in the coming months. Where if you don't understand the debt that you're utilizing or getting into, you could run into issues where your debt service is now doubled, right? So, and then you're liable for a capital call or the bank coming in and taking over the property. We don't want that to happen. You have to understand your debt and your business plan moving forward. If you're saying you're going to hold a property for 5 years, you should make sure that the debt matches that. You don't want to have a balloon in 3 years unless your business plan is to refinance in 3 years. And that should be another factor, is understanding your business plan. Are you going to go in there right away and renovate all the units? Are you going to wait until they're vacant? Are you going to do, what type of renovations are you going to do? There's so many little nuances with running and managing the property from a business perspective that needs to be sorted out prior. And obviously, you're going to change course correct and do that kind of stuff down the road, but you should have a general guideline of where you want the property to. Education also is huge. And if you are not educated yourself, you need to connect with somebody who can educate you. And it could be a mentor, it could be a forum, it could be books, it could be all of the above, but constantly being involved in the, what's going on in the market and in the economy and what other operators are doing, and always be on point educating yourself.
It's a lot of great information. I think the course correct is something that it's super important because market conditions change, and how much you're able to raise and the deals and stuff like that that are coming up really change the trajectory of what your business is. So that's a lot of great information there.
Thanks, Charles.
So you have how would you successfully balance a full time job while investing in real estate? Because you're traveling to Florida, you're not buying stuff in New York, luckily. And I mean, how you've done that? I mean, it's your long term landlord. How have you structured your business where you're able to do that?
So it's not, honestly, it's not easy, and I don't recommend it for people. If you are serious about being a multifamily investor, you need to put a lot of time and effort and energy into it. And if you're working a full-time job, and if you have a family, and if you have other jobs like I do, you got to really be ready for this. And I've seen so many people just burn out and not do it and not continue and just flop. So you have to be prepared to work a lot, right? Unless you want to be a passive investor. And I highly recommend that. If you have capital, if you have money, invest as a passive investor if you are busy. So my day is like I get up super early. I do a workout to get let me backtrack a little bit. I don't drink. I eat healthy. I make sure I get 8 hours of sleep, and I take care of myself. That being said, I get up early, I work out, and then I'm working. I work prior to my day job. I work during my day job on my real estate, and I work after my day job on my real estate. I've also limited the extracurricular activities that I used to do. And I've also limited the other jobs that I used to have. I used to have a lot of other part time jobs, which I've eliminated essentially. So it's really just a combination of understanding from the beginning that you're going to be working around the clock 7 days a week, and you have to be motivated to do that year after year. It's not something that you can just kind of give up on, because your business will suffer.
So tell us about your podcast, the Small X podcast. I mean, what do you talk about, and why did you choose that name for it?
So I typically get people on like you, investors, to talk about their journey and how they have, you know, how they have been successful, kind of give us some tips and some inspirational stories to get people motivated, as well as teaching my listeners and my audience some things about the multifamily space. And I thought of the name the Small Axe Podcast because it was initially the Small Axe Wood Shop, and my idea was it comes from two sources. The first is Bob Marley's small axe. If you are the big tree, all you need is a small axe to chop it down. As long as you keep that axe sharp, which is the second source that it comes from, which is Abraham Lincoln. If you give him 4 hours to chop down a tree, he'll spend, the first hour or whatever it is sharpening the axe. Because as long as you have a sharp axe, you can take down the biggest tree. So it's important to educate yourself, to sharpen your axe, and to sharpen whatever tool you may be working with. I truly believe that everybody has the ability to make it and be successful in the multifamily space, given whatever tools they have, what resources they have, whether that be financial resources or educational resources or the gusto, right, to get out there and be boots on the ground. So there's a way to get involved. As long as you have those tools, you need to sharpen them.
That's great. Thank you so much, Nico. So how can our listeners learn more about you, your business, your podcast?
Yeah. If you can go to my website, you'll find everything. So it's smalaxecommunities.com, and that's smalaxe, A-X-E, communities.com.
Well, that's great. Thanks so much for coming on today, Nico. Looking forward to connecting with you here in the near future.
You're the man, Charles. Thank you so much.
Hi, guys. It's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.